Good morning, good afternoon, good evening. Whenever you are watching this week's video, y'all, it's been some weeks. Y'all ain't heard from me. For those of y'all who are just meeting me, hey y'all, I'm Patrice Elberry, aka the Tax Cop, and I've been on hiatus. Now let me explain to y'all before we jump into what we're gonna talk about. What had me on hiatus? Baby, life had me on hiatus. Why? Because 3 of the 4 kids in this house all had some sort of graduation activity, prom activity, celebration activity, back to back to back, and I had to make sure everybody's schedule was where we were supposed to be on what days. And then we got it into June, so stuff was hot and heated in May. And then I got into June. In June, we had that last baby girl, the only baby girl, round the corner, get us through. So the 2 youngest ones had to get through school. Then we had to get through promotion from 8th grade to 9th grade. And then I was just tired. I was just tired. So when the scheduling happening, that second week of June, where I thought I was going to be able to do it, and I had been pushing and making sure stuff was going, I ran out of steam. And then I was like, okay, baby, we back. We going to come back. Because y'all, I didn't even realize we was rolling into Father's Day weekend. That's the same thing that happened to me for Mother's Day. We ran into Father's Day weekend. Everything was chill. And Monday hit me. I would say like a ton of bricks, but it's not going to be that. I ended up with food poisoning last week. And so I ended up with food poisoning. And the energy was not energizing. Okay? It was not there. And even when I smelled food or thought about it, and y'all was hungry, it took me some moments to get back to the point where I could be here in front of y'all. So we are now in the full and last fourth final week of June. And so, baby, I'm back. And I am going to actually kind of give y'all an abbreviated version. We'll slide into some things because now we in the 4th week of June and all kinds of ruckamaror is happening in these streets. What? We in conflicts, we blowing stuff up, all this stuff. At the same time, we ain't finished with this bill. Now, the House has passed it. The Senate has not. And so we're going to talk about what's going on because they got to go back and forth, back and forth, back and forth. But I want to point some things out to y'all in a totally different manner because I said I was going to break stuff down. It's going to be an abbreviated version, but I'm not picking political sides. I'm going to tell you my observations that I see that's happening under this administration. And maybe it's always been like this because I have not been on whitehouse.gov, not com, y'all, whitehouse.gov. If y'all go to whitehouse.com, that's your own business. Don't do it. Right? But I'm telling you .gov, okay? It's been a minute since I've been there because, hey, I've been working for myself. So back in the day, it was a part of my job to go in, okay, let's figure out what's going on with appropriations bills, etc. But now I'm looking at it and I'm like, baby, this look like we is really good with our marketing for the good old corporation of the U.S. and the A. What? So I'm going to share some things with you all. We're going to talk about where we're seeing when it comes to the one big, beautiful bill. I'm going to give you my synopsis, and then we'll break some things down, and I'll just point out some things that I see. And, of course, I'll give you my commentary along the way. All right, so let's jump over and go on look at these websites. Baby, y'all see what that say? That say America is back. We must have been gone. Y'all. This is the whitehouse.gov website. And I'm not going to lie to you. Whoever is taking the photos, y'all doing the thing. Them things is sharp. Whoever is doing the website, it is very, very, very marketable. You can like who you not like, but I'm looking at this from a business eye. And from a business eye, and when I think about researching companies and stuff like that, this is very branded. Yes. Very branded. As to what's going on, who's doing what, who is running the stuff, y'all have your own opinions. But I'm just going to tell you, this is a very branded website. It's, the colors is popping. And maybe we've always had whitehouse.gov looking like this. Maybe because I was just going to go look at the criteria. I ain't think so much to be like, oh, okay, this is sexy. It's just a lot going on. Very much branded, very much something y'all should pay attention to. If you really want to know what's going on, the beauty behind the website is it's giving you news, It's telling you what's going on with the administration. We got media, we have issues, we got history. But of course, it's from the administration's perspective. So I'm not going to say either yes or no, hate it or love it. I'm just going to say we look very much on brand for the corporation of the US of A. All right. But we're here because I wanted to back us into, y'all want to know what's happening, right? WhiteHouse.gov, House Ways and Means Committee, also very much branded. Okay, y'all see that? Y'all see that stuff? Very much branded. Okay, but down here in this corner, and we're gonna go to it. Where my mouse at? Is the one big beautiful bill? Y'all see where my arrow is down there? All right, so we're gonna go there because that's really what I want to talk about. And y'all see House Ways and Means Committee. That's their job. They're supposed to be looking for ways to make the money do what it's supposed to do. And what are they pushing? Delivering tax relief. All right, so we're gonna go through this website. There's press releases. What are they saying? Now, I'm gonna tell you this. This doesn't summarize what's going on in your state. I'm gonna go to Maryland real quick. Can I see it? South Carolina. Y'all like, she do not know the states. North Carolina, Virginia, West Virginia. We over here. Where is Maryland? Because I can't see. It's so tiny. I'm so glad y'all can't see me on the screen. This too tiny for me. It's at 50%. That's why. Okay. So let's take this up. It's Pennsylvania, Virginia. There we go. Y'all see how they got Maryland all in the cut? And when you highlight on the state, it's not going to do what you think it's going to do. All right. We're going to hover over it. And y'all see, it's going to give us download one pagers. It's telling you essentially how you're going to save some money. Let's go here because it'll give me a better, right? Here's a one pager, right? And if we download, y'all are probably like, why the heck she didn't go there in the first place? We go here. It's really giving me the market. When I say we are very heavily marketed, it is giving me all of the fields, right? Can I zoom in? Let me make it bigger on the screen. There you go. It's giving me the impact that it's supposed to have to the Maryland. Now, I can't tell you if these numbers is right, but it's not telling us really what's going to be happening in the state. It's just telling you how this new one big beautiful bill is going to, what they're proposing, right? This is their capability statements, their marketing spiel for what it's going to do to save some stuff. Now, I ain't gonna lie to you. I actually looked at this, and in some places, the numbers don't math. Only from a sense of they don't match. So it says one thing one place and something else on the same one pager. And the one pager, of course, we're talking front and back, because y'all gonna be like, Patrice, that's 2 pages. I didn't make this. I'm just showing you what's going on and what the House Ways and Means Committee over here doing. Everybody is marketing, and if you really wanted to know how stuff is going to impact you, what the federal impacts could do to you and your state, that's a location for you to go. All right? That's all I'm saying. I'm not judging. I'm not saying, okay? All right, y'all with your girl? All right, let's go back. All right. I went back too far. I like this because when I was looking at this, it gave me some fact sheets. Section by section was the thing that got me, right? So if I really wanted to know what was going on and what they're proposing in each section, right, in the bill, it tells me what they plan on keeping and what they don't plan on keeping, or what they keep extending. Okay, so now people are asking me stuff, right? So we're permanently preventing tax hikes on American families and workers. That's the overall, right? What are we doing? All right. Termination of deduction for personal exemptions. What this means is, anybody who is my client know I am not happy about this. What they saying is, baby, you're not trying to give me my personal exemptions no more. That's what it's saying. What? Because you're rude. because you're rude and disrespectful. That's what it's saying. That is what it's saying. Y'all want to see my face? Because they rude and disrespectful. So what you saying is, hey, y'all not gonna get them personal exemptions back. Anybody who's heard me do a spill, no. Your girl want her personal exemptions back. It would be nice. But they saying essentially Tax Cut and Jobs Act that they did before when they took them things away, we ain't getting it back. All right? That's what they proposing. All right. Extension of increased child tax credit and temporary enhancement. So prior to the Tax Cut and Jobs Act, child tax credit was $1,000. Since then, it's been $2,000, and then we had some adjustments based on what was going on because with COVID, there were some things that happened, right? Now, what they're saying is, hey, we're gonna keep it at Tax Cut and Job Act levels, but we're gonna do some things, and we proposing that from 2025 through 2028, the time this administration is in there, we're gonna give you an extra $500. Now, mind you, this stuff phases because it's only for now that $2,500 for y'all that's asking me like, yeah, okay, that is for if you have a dependent that is between the ages of 0 and 17. Anybody else, you only get $500. Now, I don't know if they're going to take that up to $1,000 or what they're proposing, but hey, section by section, this telling you what's going on. All right. Extension of deduction for qualified business income and permanent enhancement. Now, if this is talking about qubit and the 20% and all this kind of stuff, and anybody who is my client has heard me say, if they have a business, I'm not gonna lie to you, this is the part of the Tax Cut and Jobs Act I like. They're saying, hey, we're gonna keep that a little bit longer. We're gonna allow y'all to do what y'all gotta do, and if you have a profit on your businesses, essentially it's gonna wipe itself out, and you're only gonna be taxed on 80% of it. That's gonna do some stuff on the form and do it. I always say I actually like this portion of the Tax Cut and Jobs Act because it's going to give you an additional deduction. For some people, it can help considerably. For others, not so much. And for those of you all who've had that qubit loss that's been rolling forward, it means that you ain't got to be like, well, what's going to happen to my loss? So that is a way to give, like, push a net operating loss out into the future, right? On top of some stuff. So I actually like this. And I've always said this part of the Tax Cut and Jobs Act, I do like. We trying to extend the time. Okay. Which is one of the biggest things. Like, really, what's staying, what's not. Extension of increased estate and gift tax exemption amounts and permanent enhancement. What? They trying to push it forward. It was set to expire December 31st, 2025. Now, Tax Cut and Jobs Act overall, a lot of those provisions are set to expire in 2025. If you're my client, you've heard me say this, okay? What we're saying is, hey, we're going to take the heat off of that. We're going to kick the can down a little bit further. In most cases, that's what they're saying. If you look at this section by section, a lot of this is, hey, we're going to keep it. And we're going to kick the stuff down the can, down the yard. And then for some things, we're going to extend those thresholds. All right? Extension of increased alternative minimum tax exemption and phase out thresholds. I like that. Extension of limitation or deduction for qualified resident interest. Now, I'm going to tell you this. All right. So, this may apply to more of my clients than not. And more people probably did not realize this. Okay? So, under the current law, let's look at this. Under the current law, the deduction for qualified resident interest, also known as the home mortgage interest, which is on your Schedule A, if you can itemize, all right, is set to increase from the first $750,000 to $1 million after December 31st. That's where it was before. Okay, so then they rolled it back, right? The provision permanently lowers the deduction for qualified resident interest to the first $750,000, meaning that if your house that you bought exceeds a certain amount, right? $750,000. Then we got to start calculating some stuff different for what your interest can be. How much of your mortgage interest you actually can take. Now, you might be like, well, I don't have a $750,000 house, so this doesn't impact me. No, but it doesn't yet, right? Because if you're buying houses and things are going to go up and all the things are happening because we got inflation and interest rates aren't coming down, this is something to consider. You might want to stay in your home a little bit longer because if you go to buy a new house, you might not be able to deduct all the interest. And keep in mind that this is only for those clients that are able to itemize. Not everyone is able to itemize. Why? Because of the Tax Cut and Jobs Act, taking away our personal exemptions and increasing the standard deduction. Y'all can tell I feel some kind of way. All right. Now, extension of limitation on casualty loss deduction. They saying permanently, y'all not going to get the miscellaneous deductions. Casualty loss is one of those. Only if it's something's declared an emergency. Termination of miscellaneous itemized deductions. They're talking about permanently deleting or removing, eliminating those 2% deductions. Now, y'all going to ask me what these 2% deductions. Reimbursed employee expenses. They done made y'all go back into the office. Back in the day, some people could be able to go over itemized because they would have unreimbursed employee expenses that they could take. Parking if you had to work from home and things of those nature. That fell into your 2% miscellaneous itemized deductions that went away under the Tax Cut and Jobs Act. This is what they saying. Hey, guess what? Them things ain't never coming back. That's what we're trying to propose. We're trying to propose that stuff stay as much as the way it was under the Tax Cut and Jobs Act as possible. Not my words. That's what this stuff is saying. Okay? Limitation on tax benefit of itemized deductions. All right? So now we're talking about where we're going to end up with our standard deduction, etc. That's what they're talking about. Termination of qualified bicycle commuting reimbursement exclusion. Extension of limitation on wagering losses. Now, for those of y'all that be out here gambling, I want you to pay attention to this. Under the current law, taxpayers can claim a deduction for wagering losses to the extent of wagering winnings. Other deductions connected to wagering may also be claimed, regardless of wagering winnings. So if you have some expenses and stuff like that you incurred, fees or something like that with it, you could take those. Now this is saying, we proposing, that's House Ways and Means Committee, not Patrice, right? The provision permanently requires that all deductions for expenses incurred in relation to wagering also be limited to the extent of wagering winnings. So, anything associated with this, you over there professionally doing your thing, it's going to be limited to your winnings. Okay? Extension of increased limitation on contributions to ABLE accounts. I do like this. Extension of savers credit. I like that. Extension of rollovers for qualified tuition programs to ABLE accounts. I do like that. So if you're wondering Patrice, why you like that? Well, essentially what it's saying is, hey, when we were talking about using 529 accounts and stuff like that for education and achieving a better life, so you could do that, and what we can do with the money and what the limitations were, and can it roll over to a Roth, or can it be rolled over, some of those things from 529 to education accounts be rolled over to an ABLE account. This allows us to be able to do that. And it also gives those people that are in lower income tax brackets that are contributing to retirement accounts, they get a credit. So I do like that. I think that's a decent incentive. I hope you know where you're putting your stuff. Extension of exclusion from gross income of student loans discharged on account of death or disability. Y'all, they was making them student loans go with you to the grave. But now they like, we gonna go ahead. Y'all don't have to take that with you. No tax on tips. And y'all heard a lot of that in the news. So this is the no tax on tips, no tax on overtime, enhanced deductions for seniors, no tax on car loan interest. Now, I'm not gonna lie to you. I actually been looking at this. Most of these things that I talked about under the current law were not applicable, right? But now the car loan interest one intrigues me. It does. My car's paid for, but and I don't say that as a humble brag. I'm just saying I wouldn't get any benefit from it, but it intrigues me because cars gonna cost up more, right? And so the deduction phases out starting when the taxpayer's modified adjusted gross income exceeds $100,000. But what it gives you is a above the line deduction up to $10,000 for the interest for your car. For some people, especially as we move into getting more EVs and stuff like that, that is why that intrigued me. If you're financing a car and you're going and we're going to go more green and all this kind of stuff, and you can get a deduction, but you got to be mindful that um your AGI, my queen, she gonna phase you out. She's a phase out determiner. So if you single, it's gonna phase out at 100,000, and if you're married, found a joint, it's gonna phase out at 200,000. That I'm not gonna lie to you. That's going to be interesting to see how that plays out. And the benefit you can, the fact that it's above the line deduction. And when I say above the line deduction, meaning it's not itemized. It's not an itemized deduction. It's before we get to the queen, right? And that's pretty darn dope. Stuff like student loan interest go there. Educator expenses go in that category. It's an adjustment to get us to AGI. And so I actually am like, I'm not gonna lie to you. That's intriguing to see what that ends up looking like and how that ends up being done. That I think is pretty dope. And we don't have anything in the law right now allowing people to take the interest on cars. So that I like. Enhancement of employer provided child care credit, because baby, they gonna make us work, and it costs a lot for these kids to be watched. I understand that. Extension of paid and family leave credit. So this happened. Extension and enhancement of paid and family leave and medical leave credit. That was up underneath the Panini. Enhancement of adoption credit. Recognizing Indian tribal governments for purposes of determine whether a child has special needs. Tax credits for contributions to individuals to scholarship granting organizations. Now this right here, additional elementary, secondary, and homeschool expenses treated as qualified higher education purposes for 529 accounts. This gonna be interesting to see what goes into that and what can be used as leverage at that level in 529 accounts. And then certain post-secondary credentialing expenses treated as qualified higher education and expenses for purposes of 529 accounts. In other words, they gonna push y'all to put that money so that it can go grow and you can leverage it. All right, so that's what we're talking about there. Now this I also like. Say reinstatement of partial deduction for charitable contributions of individuals who do not elect to itemize. Now, if y'all remember, and this is not the thing I'm excited about, but if y'all remember back, I think it's 21 or 22, right? Where they did an above the line deduction for charitable contributions, even if you weren't unable to itemize, and they had it where you got $300, they're talking about bringing that back. That's not bad, right? It say 150 for singles, 300 for married filing. Now, I don't know if that means 300 per person or what that's going to end up looking like, but if you won't be like, well, I contributed to charity and I couldn't itemize, so I don't get anything. So that's something to think about. Now, and I'm not going to go through everything. I'm going to stop here. Exclusion for certain employer payments of student loans under educational assistance programs made permanent and adjusted for inflation. What? Y'all, I like this. I like this a lot. Under the current law, the first $5,250 of employer-provided educational assistance is excluded from employers' gross income, right? Meaning that your boss can give you $5,250 and it not be part of your income, and the business gets a deduction for it, and you get your student loans paid, and it don't increase your salary. What? That's what it looks like now. Okay. The provision makes permanent exclusion from gross income for qualified education loan payments under IRS Section 127C 1B. This section also indexes for inflation the maximum exclusion from gross income for educational assistance. What this means is we don't have to stay at that $5,250. And for business owners, such as yours truly, we can pay for our employee. We can use that as incentive. The business gonna get a deduction for it. It's gonna help the person out. Everybody gonna be happy. I'm liking it, right? I'm liking it. For student loans, it's a great incentive for those people who still got to pay student loans and they stuff didn't get reduced. All right. Now I'm gonna hit on one final thing because people are asking, just in case people ask me, and then we're gonna go on about it and we'll talk about some other stuff in the coming weeks. MAGA accounts. I ain't come up with this name, y'all. Essentially, what it is you have a child that is born. This is how I understand it. You have a child that is born starting January 1st, 2026 forward, right? Let me see. These accounts allowable for children born before January 1st, 2024. Okay, so they're gonna prorate it. All right, so we're gonna go from 24 moving forward, right? That you can make contributions on after-tax dollars of up to $5,000 annually. Almost essentially, think of it like a Roth for a kid, essentially from the time they're born. That's what this is. Now, they gonna tell you where it's gonna go, how it's gonna do, where it's gonna invest. So this is gonna be interesting to see how this unfolds, where it goes, how you get the thing, etc. And how the money gets set up. I'm looking at this one. MAGA account holders may not take distributions until age 18. So that child ain't gonna be able to touch that money until 18. Account holders may access up to 50% of funds for higher education, training programs, small business loans, or first-time home purchases. So it kind of expands what we would do for a 529, right? And doesn't lock us in. At age 25, account holders may withdraw any amount up to their full balance of the account for these limited purposes. At age 30, account holders have access to the full balance. Now, distributions are taxed, so it's a tax-deferred account, are as long-term capital gains, while distributions from any other purposes are taxed as ordinary income. Now, I'm going to tell y'all the truth. I don't know how I feel about this at all. I don't have anybody that falls into this range. I will say this, and I'm going to end on this note. I would encourage you to learn about custodial accounts. Because if you got a child that's in this, you can already do some stuff like this on your own. You don't have to wait for this and be like, oh, okay, this tax deferred and blah, 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 blah. If you're not going to do a 529 account, then I want you to go do your research, and you may just want to do a custodial account so that you can actually build a nest egg for that child. Teach them, get them to be aware of what's going on, and because kids know a lot more than we think they do. And put them in an environment where they can be financially educated as to how to get assets, what to use, and what can go into that custodial account. Get with a brokerage account, go do a consultation, do whatever you got to do. Because now the government is tipping and tapping into this area. I don't know how I feel. Some people would not do it any other way. Right? Meaning that you can put some money up into it. And I know when I had heard some of this stuff is that they were going to do a contribution program no matter what. They were going to put some stuff in. That's in the next section. Right? They would put some money away. $1,000, whatever, right? However that's going to look like. But you can come here to the Ways and Means website, and we'll make sure that's linked, so that you can look at these summaries section by section. You can look at it, break it in detail, and be like, oh, I was interested in this. You want to get information, you can go to whitehouse.gov. But I would say I need y'all to be aware of what this stuff says. House Ways and Means Committee, they pushing all the stuff for the taxes. Understand what Congress's job is. Congress has the power of the purse and they make law. And I want us to be fully aware of what's going on and what's being said in these laws. Why? Because I've already stated this to you all that are my clients. Some stuff I did not like. Us being capped out of certain things, us not having our personal exemptions, certain things happening. It's a great time to reach out to your representative. You have a senator, you have a representative. It's a way for your voice to be heard. Yes, we can vote. Yes, you can send letters. Yes, you can ask for a meeting. But if you don't know what Congress is over here even voting on, then how can we talk? And so this is stuff that's going to impact our pocket. This is things that's going to change our life. And everybody yes, burn the IRS down. Let's not have taxes. Nowhere in here that you hear proposed did they say they was getting rid of taxes. They say they was keeping certain provisions in place. I have not read anything that say blow up the IRS. I'm going to leave y'all with that. I'm going to leave you with the decision-making power for you to have enough insight to do your research, to go on the Google. If you want to use ChatGPT, if you want to get the bill and you want it summarized so that you can understand it. But I want to make sure that you knew where you could go. WhiteHouse.gov. Do a search for One Big Beautiful Bill. Go to Congress.gov. Go to Ways and Means Committee so that you can actually look at this and understand what is happening in these streets when it comes to the decisions that they are making. Now, I'm not going to lie to you. The One Big Beautiful Bill is over 1,000 some pages. I have it. I have been going through it. But some people not going to take the time to go through 1,000 pages. Some people not going to take the time to research and figure out what this is. But I wanted you to know, because y'all going to be asking me, well, Patrice, how does this impact me tax-wise? Here we go. This is talking about tax relief, House Ways and Means Committee. We're going to make sure you have that link and that you can go look at this section by section. You can read through it, make sure it applies. And if you got any other questions after you read it, let me know. Let me know. The last update to that fact sheet section by section was June 2nd, 2025. That does not mean that it won't be updated again. Put your ear to the street. Make sure you know what's going on. All right, y'all. I know this was kind of long. Y'all was like, woo, that's like 2.5 weeks. She tried to squish in here and break it down and make a mini session. I hope you watch to the end. If nothing more, go to the links that we have shared so that you can make sure that you do what you're supposed to do and do your own due diligence. So that when you have questions, if you want to do a tax consult or if you want a tax plan, you at least know what could apply to you. Now, this ain't finalized yet. They ain't done. It's only been approved at one side of Congress. But y'all want to know what they're discussing. Until next week. And next week will be a new month. So you're going to get a newsletter that may be talking about some of this stuff and, you know, all the other things that's going out there. Meanwhile, please pray for this country. Please pray for all the countries globally. We are all in a definite global world that will be impacted by one another. You care about your loved ones. You care about your neighbors. You care about what the gas prices are doing. You care about what the food prices are. Be cool because it's hot outside. Drink lots of water. Show love. And until next week, peace out.